Welcome back to the final hours, 3 p.m. You're looking at the chart here. This is the futures feed. We just had a really straightforward breakout day after CPI news came out at 8:30. You can see a really nice 8:30 candle. Usually I do this breakout at 8:30 opening bell, but when we have the news at 8:30, this would have been my breakout right there for the S&P futures or ES feed. And then this is my feed 8:30 for the NQ. So whether you're trading MES or MNQ, really nice chunk to the upside on both. 60.70 to 61.02. I mean, you're going up 30 plus points on the ES. Pretty solid. And you're going up from 534. I mean, even if you got the breakout candle at 570, you're looking at 230 points to the upside on the NQ. So just a ripper of a day to the upside. I mean, gap wise, if you take a look at the SPY, let's go to this chart here. Where did my feed go? It was up here somewhere. I guess it got deleted. All right, let me open up my day-to-day feed. So I had a couple of winners on SPX today. And here's what the SPY looked like this morning. As soon as the CPI news came out, we started to rip up higher. We were trading pre-market a little bit higher, and it just jumped on the CPI news. And so the gap itself was 0.46%, I believe, 0.48%. We talked about a probability of not closing that gap today, and it had about a 60% chance of staying above. And I mean, nowhere near the gap. So it just kind of directionally continued to go higher. We ended up grabbing some profit this morning out of daily profit play, which brings our nice total up to, we have a running total right now, 52 winners out of the last 57 trades. I think that's up into the 90%, maybe 91%. Let me check here. 52 out of 57. Yep, we're at 91.2% of the winners. I've got a couple waterfall trades, believe it or not. We're 33 for 33 right now with that service, and we're getting pretty close to those hitting profit. My QQQ trade, for example, let me check on that one. I don't think it closed out today, but I'm going to check on it. We are sitting at I'm literally 1 cent off from hitting profit. I think for this trade, I think I'm going to go ahead and take some profit. I'm only 1 penny off. Obviously I'm just going to take the profit. So I'm going to go ahead and replace this down to 28. I'm going to issue this for my waterfall income service. 28's not filling. You got to be kidding me, bro. All right. It's not going to fill. Never mind. I spoke too soon. I'm going to leave the take profit in at 27. If we go a little bit higher tomorrow, then we will see this one likely close out. So I have a trade in QQQ, and I have 2 trades in the SPY right in here. So if I just show my waterfall, I've got a 24-cent debit. We're trading at 28. So we've got some profit there. 24-cent debit trading at 32. We've got some profit. I'm looking for a little bit more. So those need a little bit more time and some direction to the upside, but the QQQ is much closer to a winner. I also have a butterfly spread that's likely to be a full loss tomorrow. I also bought a 30. It's a 610 call. I paid 35 cents for it. It's trading break even at 6. The 610 strike is paid for 35 cents right now. I'm looking to see if we hit the strike price at 610 by tomorrow. Maybe the PPI news will get us up into another push. Directionally, I'm looking for a 609 to 610. 610 being the big, liquidity level that I'm spying on. It was a big flip. I mean, so I talked about this morning. I really did think for just a second, I saw some market maker levels printing around like 602 and 600. 600 was the big level. If we go back to this previous high, okay, so this previous high right here, and we were trading near the lows of yesterday, I saw some beautiful levels right around 600. And so I wanted to short it into 600 and then look to get long. And unfortunately, you can see that today's price just ripped up on CPI. So my market maker levels weren't tested. The hedge levels I was looking for weren't tested. I did a butterfly spread trying to get a 600 pin price. Didn't get tested. So unfortunately, I mean, that is the good and the bad. I mean, the bad is I'm going to take a full loss on that butterfly spread. It's going to expire worthless. I don't have to do anything to manage it. It's going to cost me 26 cents a contract. No big deal. But the bad side is it's going to be a full loss. The good side is only costing 26 cents. Now, hopefully, if we get back up to the same high, this is around 609. If we push into 610, I can turn 35 cents per contract into, I've got to take profit of 85 cents. If I could get that up over $1, that'd be great, but 85 cents is still pretty darn good. So that would be over 100% gain. That would more than make up for the 26-cent loss per contract in the butterfly spread. But we didn't get a chance to bounce. I thought with this previous high and my market maker levels lining up around 600, that we would have a little bit of a reaction down and then start to rip up. That's what happened previously in CPI. We had actually a reaction to the downside first, and then the market went nuts to the upside. This time it just went nuts to the upside. So it is what it is. I'm looking to see if there's some more potential trading higher. Maybe we all of a sudden, based on today's price action, we're up 0.85% in the SPY. If we get up to some all-time highs again, then we're going to carve out 58 all-time highs. We'll probably see some waterfall income trades close out. And if we get above 609 and we do it quickly enough in a gap higher tomorrow morning, perhaps I can see that trade sitting around, I'll assess the 35-cent debit tomorrow. If we gap up, to 609 or 609.50, or we hit the 610 strike by tomorrow, then I should be able to see at least, 75 cents to 80 cents credit on that trade. So we'll keep a close eye on that one for the SPY trading tomorrow. All right, so it's been a pretty wild day. Not in a bad way. I also had some profits. The Q's just absolutely crushing it to the upside, 1.85%. The NASDAQ is running super, super hot, well above the SPY. It's got a 1% lead on the SPY today. The Dow is actually flat. The Russell is up 0.9%. So hanging in there with the same performance as the SPY, but the Russell is still lagging. IWI, this is small cap growth, had a big gap up and also running pretty darn hot. That is 1.78. So it is interesting. You've got the NASDAQ at 1.85 and the IWI, which is the top 200 growth. Both of them are running, really, really hot right now with I don't know. We had higher inflation numbers. I was pretty snarky this morning when it came to the economic calendar, because I'm like, look at this, just perfect forecasting by the U.S. We've got, CPI year over year. Core CPI 3.3 expected came in perfectly at 3.3. Awesome. Okay, I'm being sarcastic. CPI year over year forecasted 2.7, came in 2.7. So the headlines called it benign. The markets looked at this as like, oh, we forecasted it. It's not a surprise to the upside. I don't know. Maybe I'm looking too much into the fact that inflation is going higher. Right? Here's our 1-year inflation print. We're actually making higher highs on inflation. Here's the max move. We're right back to the same levels we had back in 2023. I don't know why everyone's getting excited and giving the Fed credit like they got it all figured out and everything's fine because we're cutting rates next week. Look, we go into 2025, we have tariffs, inflation gets hotter. We have oil prices spike up above $72 to $75, inflation gets hotter. I read an interesting stat where the first time since the 90s, first time since the 90s, 43 straight months of inflation over 3%. U.S. core CPI over 3% for 43 straight months. Hasn't happened since the early 90s. We go to, what's up and what's down. Transportation is much higher. Transportation 7.1%. Shelters up 4.7%. Medical care 3.7%. Food away from home 3.6%. Electricity is up. Overall CPI 2.7%, which is 0.3 higher than where we printed back in October, which is September CPI. And then what is actually down would be new cars, used cars, gasoline, fuel oil. So it is. I keep saying this, but oil prices are really the only reason that is keeping this market thinking that inflation is tamed. But look at what's happening on oil. We came down to 67. We are up. If I go to CL, we are up. On that note, let me see what my position is doing on CL. I have this trade up about $60. It's looking for max profit. Let me see here. I still have some time left in this trade out to the new year. I'm on the hook for about a $240 or $250 risk. I think it's let's see here. I got in for 23 cents. I'm trying to think of the multiple here. If I go to close, 23 cents. Let's go to a new trade. Let's go to a new trade here. So if I went out, let's say to the weekly expiration for December 16th, if I did an at the money, it's a bull call spread. So if I buy this, sell this, 9 cents, do it in the money, 13 cents, do it. That's surprising that the spread is a little wide. That's crazy. I could risk $90 to make $160. I mean, I'm not going to take this trade, but anyway, I traded it for 23 cents. So I've got to go a little bit deeper in the money. I just want to see what this is going to trade for. What's the exchange rate? So 18 cents. I'm going to go down a little bit. 21 cents. We're getting closer. 21 cents. All right, let's see what this is. So 23 cents. Yeah, so I have a $230 risk for a $270 profit. That's the trade. Now, of that $270 profit, I'm up $70. So there's still time is needed, right? If I'm up $70 out of 270, I'm only up 25, almost 26% of my max profit. I don't think it's worth taking the trade off right now, but I still have 35 days of expiration. I'm a dollar higher than my sell strike. So I'd like to see if this can get up maybe to a 50% take profit. If I can get this thing, maybe over the weekend to get up over $100 or $125, close in half the profit, I might just take the 50% gain and move on. I'm trying to think what else I did to manage trades today. I've got 28 trades going today. I took 2 trades on SPX for profit. I did close out some profit on Boeing. BA is the ticker. I just have so there's my 0 shares. But I do have some additional levels. I'm going to buy more at 101, buy more at 120. But I did have a price around 154.08 that I took some profit on. So 154.08 is up over, $11 a share. I closed it out for 166. So I grabbed about $16 a share, which isn't too bad. I was in a little allocation on Boeing. So I did take the profit there. Let's take a look at that stock for a moment. We had a nice little run, and why did I decide to grab profit? Because I had a decent allocation. I'm still looking to buy in this deeper zone. If we come back into 2022 levels or come back into COVID crash lows, then I'll scoop up some more Boeing and do a dollar allocation. But because we have been with this move to the downside, we've been making lower highs and lower lows, lower highs and lower lows. We're using this, I thought, as a nice level of resistance to reject off the backside of that 200 EMA and possibly head lower. So rather than holding onto this thing at 154, I'm just going to take the profit now on an $11 run, and we come back to 120 or come back to 100. I'll buy some more, and I'll justify maybe like a $10 to $20 swing. So I did take profit there on Boeing, but I'm going to keep the 120 and the 100 buy levels in. I'm trying to think what else I took profit on. I think that's it for right now. SPX took some profit. Boeing took some profits. And I'm just sitting and waiting to see some other trades play out for this Friday, next Friday. Got some trades on NVIDIA, got some trades on MARA, have some trades on Ford, BAC, SPY, NIO. I've got some trades in for my double up service that I'll be monitoring. If I have anybody that's watching this video or in this live with me today, I will post a quick video after. I've got a webinar at 4 p.m. and I'll probably be on that webinar for about 90 minutes. But I will post a quick update on all my positions. I'll either do like an alert update and just post it through the member portal, or I'll send out a video. But I'll do that after my 4 o'clock webinar. Okay. Yeah, that's true. Nathan's saying that most people just follow media narrative, so it doesn't matter how bad it is. I mean, look, if you want to see the media narrative, they're probably trying to keep everything pretty darn calm, because we're sitting here at all-time highs, right? NASDAQ aims for first close above 20,000. It's like markets are all pretty green. So you got the Dow flat, S&P's up almost 1%, NASDAQ's crushing it today. The VIX is down, back to 1367. We had lows at 1270 this week. Gold up $1.32. Oil's up, and I mean, this is big. This is a big, like, finally oil's making a move to say, I just don't think that oil's going to go lower. And I tried to bring this website up earlier today. Gas prices. I tried to get this gas at the pump website, and there we go. Finally. Gosh darn it. It says November 2024. Like, how freaking long do I have to wait? I'm just trying to get a real, I need like a FactSet or Bloomberg terminal to get my real data set. What I'm looking for is what is the average gas at the pump price. And, what I can always just spot check this. This is AAA gas prices. And what I'm noticing is, I mean, and again, it's 1 cent, but the current average is 302. Yesterday was 301. Week ago was 303. A month ago, 308. And a year ago, 315. I would say this. If we start to see that the current average is greater than 315, guess what? That means that we are now higher than we were a year ago. You can't tell me that gas prices are getting better. And everyone that's driving by and commuting to work is going to see that, oh my gosh, gas prices are up 10 to 15 cents a gallon. So I'm just saying it's probably a matter of time. If I take a look at the chart here for U.S. oil, up around 3% on the day. This floor has been hanging out, just kind of building support. And for a second, I was thinking, okay, the U.S. starts to drill domestically, and all this stuff is maybe coming in 2025, but we haven't taken any highs out. So if we were to squeeze above all these highs, do we end up testing like 75? Possibly. Do we end up squeezing back up towards 80? Possibly. And there's no way that inflation data is going to be good if oil prices are up. I just read through the list of things that are positive or negative over the last year in inflation, and it's gas prices, fuel prices, and what was the other one? Basically, just overall energy prices you know? So they're down for the last 12 months, and I think that's been a huge contributor to having our inflation numbers being okay. But if we start seeing readings going into 2025 where CPI is greater than 3% and core CPI is currently printed 3.3, if it's greater than like 3.5, it's like we're just not heading in the right direction. So will the Fed acknowledge it? Maybe. We've got a rate decision next week. The market doesn't seem to give a funyun about the Fed because it's 96% priced in that we're going to have a rate cut, and that's why the market's justifying these new highs. So here we are, 95% probability we cut another 25 basis points. That brings the Fed down 100 bips since September. Okay, but again, to say that this is the market kind of calling the bluff here. Where is our 10-year yield? Okay, 10-year yield for today is up 1%. This is also not a good sign. Fed cutting rates, 10-year yield ripping higher, not a good sign. This is my biggest concern going into 2025. If this 10-year is higher, this is bad for the economy. If this 10-year is lower, it's fine. But if it's higher, there's no way we can see that there's going to be crazy amounts of growth. You may have seen the analyst reports. I saw this in daily, Opening Bell Daily with Phil Rosen. I have his newsletter. Oppenheim came out and said that the S&P is going to go up 17% next year, and UBS said it's going to go, up 5%. Goldman Sachs and some of the big investment banks are saying like 7 to 8%. Forecasting doesn't mean anything because they're all dead wrong. On average, you're seeing 8 to 10% a year. So most analysts are like, we'll just go ahead and project from right now 8 to 10%. That's their forecast. This year, I think the highest prediction for the S&P was like 600 plus points off. It was so far off, it wasn't even funny. And I think Oppenheim has the S&P up over 7,000 next year. So will they get there? I don't know. But between 5% and 17%. I don't think traders would complain or investors would complain about having another positive year. It's just, does it come with a, snap correction where we pull back 5, 10, 15%, and then we grind all the way back to those highs again? If so, that's why I'm patiently waiting to see if there's any opportunities to allocate and deploy some capital. It's not there yet, but if we have a pullback, I am salivating for some type of correction. Now, I'm not playing it bearish. I'm just waiting to see what is it that would create some type of pullback into my dynamic support, and I'll just be patient. Otherwise, as the melt up continues, let it do its thing. Donna, gas regular 269. That's good. I see it as low as 289 out here in the mountains, which isn't terrible. It's 299 if you pay credit. It's 289 if you use their gas card. So it's a little misleading because you see 289 in the sign, and then it says nitro, and then they flip the sign to 299 when it says credit. So, you have like grocery stores, a little bit cheaper, Costco gases. Has anyone gotten gas at Costco before? Their line is always so busy. Just like the store, it's like it's a factory, but I'm sure their prices are like 280 a gallon, 260, 250. Let me see what let's see if we go national average gas price at Costco. Let me see if it'll pop up. There's no way. Says national average gas price at Costco is $3.01. Come on, man. Donna's in Pittsfield Township near Ann Arbor making $2.69. Costco's at $3.01. Crazy. Let me go to gas price spot with Costco gas prices. I'm just curious. This is more just for fun. Let's see what Costco is in Salt Lake City. So let's go city, Salt Lake City. 343 and 344 at Costco. What? That's ridiculous. I mean, around like downtown Salt Lake City, it's like 320 a gallon. There's no way Costco's more expensive. All right, anyway, who cares? All right, so we're sitting here near all-time highs again. All it took was a little CPI news. The market got all excited about a benign inflation reading. 3.3% core CPI, 2.7 CPI, exactly as forecasted. Like I said, jokingly, wow, what amazing economists we have here in the U.S. We have to revise our jobs by 818,000, but we get CPI spot on. So again, market doesn't seem to care because we're sitting here at all-time highs, right? Gold and silver. Gold and silver's had a pretty good rip. We got oil up 3%. We got gold up 0.91. We've got silver up 0.21. They both had a pretty decent week. Let me take a look. So gold has had a nice move the last 3 days. We had a 9-day chop fest and then a 3-day breakout. I still like gold. I'm still holding GLD. I still have some GC futures trades in, and I'm looking to see if gold wants to get back to these highs and tap the all-time highs again. I'm going to stay pretty bullish and committed on gold until we hit 3,000. We might also, go sideways first. And so I'd be looking for a level to continue to invest in at support and not necessarily short or take profit. I'm looking to still see, higher highs in gold. But I like the move and I like the possibility of getting up to all-time highs once again. We go to silver. Silver had some highs back in October. I'd like to obviously see them taken out. If we go to, let me just use kind of a rough drawn channel here. But if we take this level, and let me make a parallel line for that. So if I go here, oops, let's go parallel. Okay, let's just say that we have a channel. I know this isn't super accurate here, but let's just say we have a channel. So I'm running parallel off of support. So we have lows, lows, and lows. If we get up to some fresh highs, there is a measured move at 35.88. I'm looking for a kind of a channel high around 38. I think 40 is a nice round number for silver. This is really a big target 1 for me, and then a big target 2. So between 35 and change, almost high 35s and $48, those are my big levels on silver. So I'm going to stay long. I've got levels in on SLV. I've got credit spreads, debit spreads. I've got own shares, SI, a bunch of credit spreads, most likely in debit, or actually it's debit spreads, credit spreads as well. But those silver positions are all the way down into the 20s, like low 20s. So silver's at 32.86 on the futures feed, and my positions are down into like the 22s and 21s. So I'm going to let those go to full expiration. And Bitcoin is up over 100K again today. So we got those peripherals that are doing some work. So BITO up to 2612, up 5+% today. IBIT up 5+% today. Not quite to fresh all-time highs, nor is Bitcoin, but pretty darn close. We got highs around 103.71. IBIT, let's see if we break some fresh highs. FBTC, same thing. We're going to hit some fresh highs above $91. MicroStrategy up 8.5% today. Again, just this percentage is astounding. You've got Bitcoin almost up 5%. You got MicroStrategy at 8.65 or 8.5. We got traders doing MSTX. I think that's the ticker for the double leverage MicroStrategy. It's probably up 15 or 16% today. It's just unbelievable. So it's crazy. Be careful, but it's awesome to have like a day like that where it just rips. Coinbase is positive on the day, up almost 5%. Ethereum, another good day, up 5%. And the peripheral, correlations. EETH is my ETF that I trade credit spreads on, and debit spreads, and I have some naked puts. That's up 5% today. The price that I need to stay above by the end of the year is $60. It's in some good profit. I'm just gonna let that run. I did talk about this morning. This is Argentina. Look at this run in Argentina. I'm just gonna wait for a pullback, but I want to be long Argentina going into 2025. Mag 7, we had a nice little rejection here on Apple, but we were up to fresh all-time highs. Amazon is creeping up to all-time highs, actually hit all-time highs today. Google has been on a freaking rip for 2 days. This is insane. From 174 to 194, traders, that is a 11% move on a Mag 7. leading the way. I mean, that's a blowout type move. And again, Google plus Apple plus Amazon plus Meta plus Netflix plus Microsoft plus Nvidia. I mean, Nvidia is up 3.7% today. Big whoop. I need Nvidia to get back above 143 if it can by Friday. That'd be pretty nice. Netflix creeping up to all-time highs. We're probably closing in on $1,000. I'd love to see a dip or a pullback before we make a run to 1,000. I don't know if we're going to get there. Great, but otherwise, this is just melting up higher and maybe hitting that $1,000 mark. But we are getting pretty overstretched, and this also has a decent bar count. Last time we hit, this is probably around 278 bars or so, 288 bars, and percentage-wise, we've had a pretty good stretch away from the 200 moving average. It's 27% away from the 200 moving average. Not saying that's historically high, but it's got to be close. It's got to be close to one of the higher levels we've seen as far as the stretch away move. So again, I'm not calling the top on Netflix. I just want to see, however the top needs to form. I want to see a dip and a pullback so I can add in some more exposure. I like Netflix. I think it's pretty clear that it is the king of streaming, and the Disney Plus and the Hulus and the Amazon Primes and blah blah blah. Like, it doesn't matter anymore. Netflix is cemented itself. I think their subscriber growth is growing. They're getting into the live sports arena. They're getting into, they're really taking the pay-per-view space. I mean, you saw the Mike Tyson, Jake Paul, call it what you will. I don't think that was much of a fight. I was certainly disappointed. I got caught up in all the hype, and it was just a terrible exhibition. But I still watched it, and it kind of broke all sorts of records with live streaming around the world, and Netflix was the host. So it's still pretty cool, and they're doing that stuff with, more and more sports and more big spectacles moving forward. Okay, Nvidia up to 140. I'm going to see if we get back above 143 by the end of this week. Tesla also ripping to some fresh highs. Are we at new all-time highs on Tesla? Yes, we are, ladies and gentlemen. Wow, look at that post-election move, man. From 250 to 419. Are you freaking kidding me, man? Like almost 100%, 67% since the election. Unbelievable. Okay, in April of this year, Tesla is now up 190%. Freaking unreal. I'm glad I'm long. I'm glad I'm in a bunch of income trades, but man, I wish I piled in some more shares. I did not. All right, anyway, bonds are down, yields are up. That's going to be something to watch. Mortgage rates have come down briefly. Okay, this is another thing that I think is going to probably upset every consumer is when their mortgage rates don't budge. We're sitting here 100%, 100 basis points lower than the Fed cuts since September. Mortgage rates have moved pretty much nothing. Pretty much nothing, right? I mean, yes, we had a high in 2023 at 7.8%. We came down to 6.09. This was the disappointment. We were down to 6.09. The Fed cut rates and the market went the complete opposite way based on that 10-year yield. So here we are, 60 to 70 basis points higher. And, I'm in the same boat. Like, are we going to see lower mortgage rates? Do we have to have like a straight up housing crisis? Do we need to see house prices plateau or start to drop and see the average home price going down? Maybe. I mean, something's going to have to break. This affordability index is the all-time worst we've ever had. Houses are still hanging on to these crazy high prices. Everyone thinks their house is worth 2 to 3 times what it is, and mortgage rates are still crazy high. So it's just it's keeping people squatting. It's keeping people from moving. But the ability to get an assumable mortgage is almost impossible. It's like less than 20% of mortgages. So pretty much you're stuck at, like, you want to close on a new house. Good luck closing at a decent interest rate. So that's where we're at. Unaffordable housing index. Inflation is sticky. We haven't gone anywhere. We haven't improved since 2023. We're at the same level we were since summer last year. The only notable thing is that our stock market is higher. So if you want to offset inflation, you trade stocks, right? You're investing. You're in Bitcoin. You're in anything. You trade. So that's the good thing is, portfolios being up 20, 30, 40% this year or whatever it is. You're offsetting some inflation costs, and that's justifiable. But it's not easy. It's not easy to grind out, 30, 40, 50% in a year. The market itself, all by itself, is up 25 to 30%. I mean, NASDAQ's up probably 30% this year, and everyone looks at it like it's so easy, but it's not. There's never an easier trading. Same thing. Like, it's fine. It's straightforward. This year was pretty straightforward. We're extending a 2-year bull market, but it's not easy, right? Because you got this lingering narrative about how bad things are and how bad things are going to be and what to be uncertain about, and it fuels all this panic. It's like the only thing that galvanizes as a crowd is fear. So anyway, I'm just saying there's a lot of stuff that's out there that's like, it's not great. Most Americans live in paycheck to paycheck. Most people can't afford to buy a home right now. It requires like 40 to 50% of your gross revenue in order to be in the average home price at these current rates. So China, what a big flop that was this week. So HSI was up and now it's down. BABA was up and now it's down. Baidu was up and now it's down. FXI was up and now it's down. Man, I am so freaking happy that I closed out FXI right here. I took a bunch of profit. I closed out all my credit spreads. These are all done. So I can get rid of that one. Happy to be out of that. Happy to be out of that. I also had some shares of FXI. I closed that out as well. KWeb, I closed that out as well. JD, I do have this one repaired. I've got it up to $39 out to the end of the year. Let me check on this one here. JD is, I own the shares. I'm covered at $39 on January 3rd. So if we have a little bit of a melt up, this will make me, income wise, I want to say like $4. No, about $3. It's like $3 a share. $3 a share. So it's like $1,500 per account. That'll be on 9 accounts. So 9 at 1,500. I'll make about $13.5 on JD if I can get it above $39 by January 3rd. Okay. All right. Let's switch gears. Let's go into some currencies, and I'll go for another maybe 10 minutes or so, and then I'll start prepping for my 4 o'clock webinar. Okay. There you go, Francois. You said it perfectly. The wall of worry. That's what it's been doing all year. And it's this simple. If the market keeps being told that we're going to have a recession, it's going to keep going higher. And the reason why is because the reason the market corrects is because nobody's really looking, right? It's like this outlier thing that the market just ties up, wraps up, bows up, and says, this is why the market's going to correct right now. You'd think it'd be logical. You think it'd be a misstep from the Fed. You think it'd be a policy mistake by the Fed. You think it'd be a new administration getting super aggressive and talking about all this policy reform that's going to create uncertainty. It could be all that, right? But it could be something completely that we haven't even sniffed this entire year. And that's the unknown. And maybe it happens, less than 10% of the time. But I know that those 10% of the times can be something that will absolutely change the way you trade. That volatility event we had back in August changed the way that I trade. I started to really clean up my futures trading. I cut a lot of the exposure out of my futures trading, even though it would have been the point of survival was like, I was fine. I took some small losses. I had some bear traps. I ended up netting some decent money on that Valmagen event, but it scared me enough to say, look, I had like my deepest drawdown of the year was that July to August, and so I just tightened things up and I didn't get as aggressive. And I was aggressive going into the election, but I'm just like, let me trade more liquid. Let me trade the ETFs. Let me trade the indexes. Let's keep futures out of it, other than scalping and hedging. So anyway, point is, who knows what the real catalyst to bringing the market down is going to be. I'm sick of racking my brain. I just know that I need to have the protection to the downside just in case. So I've got a lot of my protection out to the end of the year. Once we turn the corner, whether we melt up higher or we actually do fall by the end of the year, maybe we don't. I'll just waste 0.2% of my account. But to the upside, if I'm melting up 3, 4, 5%, I get gains. So the last 3 months have been pretty steady. I just reviewed my portfolio. We had gains of like 4.6%, 4.9%, and the election month for November was like almost 8%. So it's been a pretty good rip for the last 3 months to put me ahead, and I'm outperforming the benchmark by a pretty decent amount now. So anyway, that's it. Let's switch gears. Let's go to some currencies. I'm going to whip through all 28 currency pairs here. The CAD, so the Bank of Canada cut rates today by 50 basis points, and the market's like, yeah, good for you. We're going to get you strong today. So the CAD cuts by 50 basis points. I don't know what they said. I don't know why the market interpreted this as, unless this has nothing to do with the BOC, but everything to do with oil prices, right? Look at, so the reaction was, here's your rate decision, and then we pretty much stalled there all day. So it was just really a big pop on the news. But even though a rate cut, I was expecting, not necessarily cut, but a bunch of noise. But it was interesting to see the CAD get squeezed the way that it did. So it's fine. I'm still long CAD Swiss. I'm still going to hold my longs on dollar CAD. Pound CAD, Euro CAD started to turn a little bit, but I don't like them enough to trade them. Aussie CAD, I'm still holding long for the positive swap. The RBA held rates at 4.35, and the CAD is still sitting now at 3.25. 3.25. Yeah. So I'm getting a positive swap on the New Zealand CAD long and the Aussie CAD long, and I'm okay with that. So this one is, a trade like that. I'm looking to see if this support will hold. If it does, looking for a bottom in here, looking for something to confirm on a smaller time frame, and then hopefully we'll take this back up towards channel highs. So from this support level to this resistance level, I'm just trading the Aussie CAD back up into that channel high. That should be somewhere around like 9,100. Okay. Let's see. When Trump gets in, bank institutions stop getting free Fed window discount money, liable to see a global sell-off. Yeah, it's very possible. I mean, look, if the M2 dries up a little bit, and that's the thing is, I don't know if it will. I mean, the one thing that's also been the big constant in the background, and that's what's kind of caught this bull market off guard. I mean, not a lot of people expected to see the run we saw for the last 2.5 years. Right? You go to Q4 of 2022 into now, almost done with 2024. We've had a 2+ year bull market, and a lot of this was, Mag 7 recovery. Then we broadened out to AI and semiconductors. Then we broadened out to the entire market. But a lot of this was on the coattails of fiscal policy, not monetary policy. And Trump coming in, there's not going to be like this big austerity measure and saying like, oh, no more fiscal spending. I mean, the government's going to talk about the debt ceiling. Doesn't mean they're not going to lift it. The government's adding $1 trillion. The Fed's adding $1 trillion of debt every 45 to 60 days. Doesn't mean they're going to stop. We're at $36 trillion right now. Does the market care? Apparently not. Will they care ever? Maybe, but not right now. So I don't know how aggressive the fiscal spending will be. I mean, that was the argument going into the election, is that Trump is going to be, $4 trillion of fiscal spending over the next 4 to 8 years. I mean, he won't be president after 4 years, but Kamala Harris, same thing. It's like another $4 to $6 trillion over 4 years, or it's not good, you know. And so unless we can just really step up the nominal GDP growth and the real GDP growth, and the things just like have to balance. But I think we're so out of whack right now. It's a weird melt up, and I think the melt up will come back to find some gravity at some point. It's been out of orbit in its own little island stratosphere, and eventually when it comes back, we'll see how nasty it gets. But until then, enjoy the melt up. I'm not fading this thing. I'm not calling the top. There's very little disruption right now unless the Fed really, like I said, surprises or disrupts this trend. But since we're sitting here again, right back up towards all-time highs with PPI tomorrow and the Fed next week looking to cut, we're probably going to creep up higher. I would imagine we're going to creep up higher. So, I mean, yeah, there could be a reality check, but it's like, how, when, what? I don't know. So I'll just continue to play the safe game and try not to do anything stupid. There's probably a lot of sessions over the last couple months. That's what I keep saying. Just try not to do anything stupid. Market wants to go up, let it go up. Enjoy the run. Don't fight it. Make more money. Okay. All I'm doing is I'm willing to sacrifice a little tiny sliver of that just to make sure I'm protected to the downside, and I'll keep doing that. I have to do that. I'm not going to be on the hook for, if we have a 5 to 10% correction, I'm not going to be on the hook for that. I'm going to hedge that thing. Okay. All right. Anyway, Aussie CAD, we're good. Let's take a look at Swiss pairs. Swiss National Bank is tomorrow morning. They're expected to cut rates by 25 basis points. I would love to see another big wave of movement. If we have a nice move on the Aussie Swiss and we have a big pop where the Swiss gets weaker, I'd love to see a sustained wave of Swiss weakness with this carry trade still being somewhat alive and well. So I'm still going to hold that position. Yen, staying out of it. Aussie, New Zealand, anything interesting here? Not really. I'm staying out of this one too. I'm just going to wait for a level. I mean, I had mentioned that maybe like this level in Aussie, New Zealand, maybe something like this. If you wanted to buy and look to see if this turns north. RBA, RBNZ, they're kind of comparable. I mean, interest rate wise, they're about the same. CBRates.com. New Zealand is at 4.25 and the Aussie is at 4.35. So right now, if you're actually long Aussie New Zealand, you're not paying any carry for that. So Aussie New Zealand, and 0.1% is not like, oh, it's a carry trade. It's really not. It's just you're not paying on it. So actually, now that I see this, I think I'm going to go long. I think I'm going to go long Aussie New Zealand. I'm going to go long. So trade, create new order. I'm going to buy this thing at market. Let's go buy it. Okay. So I'm going to buy it at 110. I'm going to try to take this up to score a point at 111.80. So let me go take profit up towards 111.75. So just shy of that point. There we go. And if it comes down lower, I will just dollar cost average into it. I could stop myself out here right below that low, but I'm not going to. I'm just going to not use the stop loss. So no stop loss. Get out of this one. All right. So I'm going to look to see if this slightly positive carry off the 200 moving average, off this potential channel, and going after this level at 1.14. If I can get long Aus in New Zealand and see this thing go back up to score a point, I'll take some profit. Okay. All right. Let's go to the next one. Aussie dollar. I am getting ready here. 63.10. So buy limit 63.10. Let's go set this out for. I just want the expiration to be way out there. So 63.10 and a 62.10. Trade this non-FIFO. 12. Yeah, that's good. 2025. And then a 6,000. I'm going to go 60.20. 60.20. 25.02 for non-FIFO. Good, there we go. All right, so my levels have not been tested yet on the Australian dollar, but I'm looking to see if I can get in for scooping up some multi-year support. Okay, New Zealand dollar, same thing. I'm already in a trade at 58. My next trade is 57.25. So buy limit 57.25. Go 25.02. Take profit's going to be 60.50. And then it's 56.05. 56.05. 25.06. Take profit 60.50. Expiration. Yep, there we go. Okay. So those are my levels again. I just had those trades expire in my platform. So I'm reissuing those trades according to what I have in my chart, and I'm looking to go long New Zealand dollar. Dollar CAD, I'm still holding long. We're up to 140, 163. I'm holding this bad boy long to this measure move up to 44. I'm going to try to hold this thing all the way to 4,500 or very close to it. I'm going to trap some profit. You can see my take profit right up there, 44.50. But if we get close to that, I might just move this higher and start trapping it and trailing it with a stop loss. But I've got some stacked orders on dollar CAD. Anything on the euro dollar, pound dollar, I don't really love that much. I'm not trading these. I do have a small position on pound US dollar. It's getting back there. I should probably just close this out for a small loss. I'm down, $39. I should just take the loss. Yeah, I'm going to take the loss here. Okay, I'm closing out for a $40 loss on the pound dollar. I'm out of this trade. I like the Aussie dollar, New Zealand dollar better. I don't like the pound dollar or the euro dollar as much. So I'm going to stick with the commodity-based pairs and stick with kind of this back and forth with China. If China starts lifting animal spirits, that should benefit the Aussie. So I'll just stick with that trade. Okay. Because it's a clone, Kyle. I've got a master account that's not very large. It's like 25K, and that is copying on a copier service for millions of dollars. So yeah, it's a master account that I can be a little bit more aggressive on. Where $50, $100, couple, I make $500. It's like those are big chunks in a Forex account. So that's why. IVZ. I haven't looked at this one, Daniel. Let me take a look. IVZ. What is this? In venture. Have we talked about this one before? Investment managers, finance, dividend at 4.4, beta's 0.9. What is this nonsense? Closed-end fund, retirement plans. I don't know. I don't know what this is. I'll read more about it. Is this correct? Invesco. There is one that I'm in called Full Cycle Trend. I know the guy Warren Pies. I've heard his podcast a bunch. I've studied his research at 314 Research, and he runs like basically it's like a 20 to 40 stock holding, and it's based on like trend momentum and cycle rotations. And I mean, he's outperformed the benchmarks by like 6 to 10% for the last like 10 years. And so I did a little dollar allocation to that. I think the ticker is FCT. Nope. It is Full Cycle Trend. Yeah, 14 Full Cycle Trend is FCTE. So I did some dollar allocation to that. This IVZ, I'm not really sure what it is. But it shows here that it's mutual funds, unit trusts, exchange traded funds, closed-end funds, retirement plans. That means boring. Yep. So that means, look, I could care less about how a financial advisor wants to plug you into a mutual fund. That is honestly like what I fought the most over my 15 years of managing money is financial advisors are going to peddle their own products, put you in like, oh, this is our mutual fund and our cost basis. And why is that? Because they get bigger commissions and they just want to keep you in the boat. So I'm not interested. I mean, basically, if you did something like this, you're taking it for the 4% dividend and hoping the market goes higher. That's really all it is. Performance-wise, there's no way this thing has outperformed the market. So anyway, that's it. All right, everybody, I've got 9 minutes for a 4 o'clock webinar, so I'm going to bounce, and I'll be back at it tomorrow. So anyone that's in my double up alert service, look for an update from me. I'll probably just post an alert and post that through the one-click trading member portal and just do a spot check on the trades. I mean, look, the trades that are in for this Friday, the trades in for next Friday, I'm still holding them. The liquidity levels look fine. I spot checked them today. I'm probably going to take, today's going to be a loss on the SPY at 600, but if we get up to 610, 611 tomorrow, that's a nice little winner. We'll make a net gain in the SPY. Levels on Ford, Bank of America, MARA, NVIDIA. Maybe we get lucky on the credit spread at 143 this week, which will finance the long call. So we'll see how the chips fall for this Friday and next Friday. Okay. All right. Okay, sounds good. Thanks. The 4 o'clock webinar, if you're in my Telegram service, you got it right there. It's going to be Jack Carter and myself. So this service that I'm running here, 33 for 33. We're actually very close to sitting on 34 for 34 with potentially 2 more winners. So this is kind of crazy, but we could be, with the trades I have right now, we could be 36 for 36 if we drift up just a little bit higher by the end of the year. And that's pretty good. We're going to take some more trades on Monday together. But Jack and I had a lot of fun doing this yesterday. We're doing it again. So if you're in my Telegram, you can jump in and join the session here at 4 o'clock, prosperitypub.com/weekly. That's the link. But yeah, I'll post my links here for Telegram if you'd like to join. It's free Telegram, free Discord. So here you go. Yep. Here is my Chris Pulver Telegram. And then my Discord. So if you join the Telegram, you can get the link. If you're already in my Telegram, you have the link. And then my server settings. Nope, I just need to invite people to my Discord. I also make that disclaimer with Discord that if you're in my Discord, I don't send friend requests. I don't send direct messages. So any type of activity that looks like that resembles me, it's not me. So please help me kick, report, ban that type of crap that lives and breathes in the shadows of direct messaging. So Chris Pulver Discord, there you go. But all are welcome to join. Use the public channels. You can see me chatting there every single day. I just talk to everybody. So I'm not looking to direct message. I'm not looking to send friend requests. If you direct message me, I'll respond. That's fine. If you add a friend request to me, with a direct message, I'll probably add you, but I don't initiate that stuff just for safety of the server. Okay. All right. Yep. So I'm going to start that webinar with Jack Carter here in 7 minutes. And thanks for being with me today on the final hour. Let's see what we have for tomorrow. All right. Thanks, everybody. Bye.